All right. When it comes to the Dow Jones and the stock market and the S&P 500, all of the markets here in the United States, what you need is everybody out there needs a reality check. Seriously. Now, I'm going to show you a chart and just exactly what I'm talking about. On October 9th, 2007, the Dow Jones peaked. By September 15th, 2008, Lehman Brothers filed for bankruptcy. And look at what happened. It was one heck of a crash. An event happened. Right? All it takes is an event. Now, what happened was, if you take a look on November 24th, 2008, quantitative easing 1 was announced. But it didn't stop the complete fall. It didn't stop the fall until February 13th of 2009, when the U.S. fiscal stimulus was passed. It was passed. Once that was passed, the fiscal stimulus, and they started the stimulus in earnest, do you see what happened with the stock market? It went up and up and up and up and up. Right? And then what happened is they ended quantitative easing 1, and the stock market started to roll over. And then they announced quantitative easing 2 on November 3rd of 2010. And what happened? The stock market roared up again to new highs. Then the stock market started to roll over again when quantitative easing 2 ended, and they had to have Operation Twist, a new federal stimulus package. And what happened? After it went back up again, the stock market. Now, what's this showing you? It's showing you the stimulus raises the stock market up more than anything. And when stimulus cuts off, the stock market tends to drift back down again. Now, here's the thing. They ended fiscal stimulus, quantitative easing. They ended it a while ago. And it's amazing that the stock market is to the heights that it is right now. Honest to Pete. The stock market is reached tremendous new highs, and they've been pulling the table legs out from underneath it. They've been pulling the legs out from under it. And now, with them adding to that, with raising interest rates, what you're doing, every time they're raising interest rates now, it's like playing a game of Jenga. Do you know what Jenga is? It's a bunch of little wood blocks, and you stack them up, and you got to pull a block out each time. This is an enormous game of Jenga that the Federal Reserve is playing, and so far they've got away with pulling the blocks out, and the whole tower hasn't fell yet. It's like a house of cards. But every time they raise interest rates, it's like they're pulling another block out from under the whole thing. What I'm trying to say is this is becoming precarious. The higher the stock market goes, and the more that Federal Reserve is doing this stuff, like raising interest rates, and then on top of it, going to sell their balance book, they're entering into uncharted territory. There's an old saying: fools rush in where angels fear to tread. And this is what they're doing. They're rushing in to uncharted territory, and they've never been here before. They don't know what's going to happen. The stock market is as bloated as it was in 1929 before the crash of the Great Depression. So now, this is a precarious situation, because I'm not going to tell you guys not to invest in the stock market. Because, the stock market, it's such an unpredictable animal that it could actually go up some more and add to this craziness. Because back when it was 18,000, I should say, I thought to myself, oh, it can't go up any higher. When it was like 18,000. I was like amazed to see it go up over 20,000. and then keep pushing up to almost over 21,000. It's just utterly amazing and shocking. I never thought, especially since they don't have any quantitative easing going on right now. No stimulus going on. And all I can say is this thing is just an accident waiting to happen at this point. And so the thing is my estimation of it, I'm not going to have any money in it. I'm going to tell you that right now. No. I'm not a gambler. And I don't want to lose my money. I'm not going to put any money in something so risky. Not me. Now, you guys, you can go ahead and stuff all your money into it if you want to. But to me, right now, this is just like a game of Jenga, and I'm waiting until I think the Fed's going to knock this whole tower over, and they're going to bring it come tumbling down. This is what I personally think. I think that's what they want to do, though. I think they want to bring it down, and then they want to squeal high heavens that the sky is falling after they bring it down. And what they want is they want to go back not only to quantitative easing, but they want to go to something new, helicopter money, and they want to enrich all of their banker buddies at the feeding trough. It's like a bunch of hogs at a trough, and they got the trough all to themselves. We don't get any. They don't give us any. They pour all the slops in for these guys, and they get to feed at the trough, and they get to grow fat off of all the money. They're right in there for the money, and they're able to get it. You're not able to get it. You'll never get any. You're going to be starving on the other end, not have anything. So anyway, this is what's going on, and so I would say be very, very, very careful about investing in the stock market at this point. It's an awful risky gamble. You're probably better off to stay clear of the thing, in my estimation. But I'm not going to tell you to stay clear of it because it's such an unpredictable animal. It actually could go up some more before it goes down. But I just got the feeling that they're knocking the legs out from under it, and where's it going to go? I mean, when you knock the legs out from underneath something, and how they're knocking the legs out is quantitative easing. Is gone, and now what they're doing is now they're raising interest rates, and then they're going to start to sell their toxic balance book. So if raising interest rates doesn't do it, more than likely selling their toxic balance book will do it and bring it all down. And when are they going to do that? I think they said they're going to do it before the end of the year. So that's when the party will begin, before the end of the year. I wouldn't be a bit surprised if the whole thing crashes sometime in October. You know? It wouldn't surprise me a bit. If it matches the Great Depression. And it just seems to me that they're very I just got this feeling that they might get away with the next interest rate hike without the market rolling over. I just got the feeling that they might get away with this next interest rate hike. I just got the gut feeling it's going to be the one after that nails it. So the one that comes in the fall. I think they're going to do one in June or something, and then the following one. I think it's the following one that's going to bring the thing down in the fall, maybe September or something. Well, that would fit in for October, wouldn't it? Anyway, they're planning on doing 2 this year. They've all agreed on 2. I did it on one of my shows there a little while ago. All the Fed chiefs have all agreed on 2 interest rate hikes, more than they've had now. 3 in total. They've already done 1, and then they're going to do 2 more. 2 more this year. And I don't think they're going to get... I think it's the second one that's going to get them. I think they might get away with the first one. So let's just wait and see. This could get really exciting this fall if the market crashes. And everything comes tumbling down, and then they have to turn this ship around. And when they have to turn the whole thing around, that's when they're going to have to go back to hyper monetary stimulus. And that's when the gold and silver is going to take off. Is when the hyper monetary stimulus comes. But until then, it's going to suffer. like it is, it's been suffering. Something desperate. And, of course, this is just going to make it, when it turns around the other way, even more of a desperate situation going up. Because the harder you push it down, the more pressure's on it, the harder it's going to recoil back the other way. And why is because the miners, the more they push it down on this end, the more you're going to lose mining production. And it's just going to make it that much rarer on the other end, with less mining production. And so, whenever they push it down another $1, I look at it like, hey, get out there and buy yourself some silver. They've knocked it down another $1, and they've created a buyer opportunity for you guys that won't come along again, ever. Go out and get yourself a bit more. And then also, at the same time, you got to realize that it's a blessing every time they knock it down $1. Because what's going to happen is this is going to put more and more pressure on the miners. And the miners, when they send their crews home, say they got 4 excavators working, or a big truck, or a dredger, or whatever they got, right? And they say, okay, we haven't got enough money to keep this particular crew going. And they say, send that crew home. Send all the crew home. So they send them all home, and they sell the equipment off. And they sell everything off in that end of the mine. They close that end of the mine down. Do you know what it takes to get that back going again? Once they've shut it all down and everything? And how long it takes to get that back going again? And how much more investment? Because they've sold off all the equipment. Now they got to buy all new equipment. And now they got to go out and recruit new people and new help. And that all takes time. And it all takes money and effort. And now they got to get new licenses and everything else. It all, once they shut it down, then to get it back going again probably takes at least 6 months or a year. Just to hire the people and to buy new equipment and stuff. And to get it all back running again. And it adds added expense to get it all back going again. And these prices, if they keep knocking $1 off, these miners are going to have to do that. They're going to have to shut down certain parts of their mine. Mining production will slump off. Then when the price goes back up on silver, and I mean way up, then the mines will want to open up those sections they shut down to increase production again. And it's going to cost astronomical amount of money. And they're not going to be able to sell the silver anymore for $14 or whatever they get it down to. Forget that. Now the new price, and not only that, by then the price of oil will be up. Because this whole thing with the price of oil is all temporary too. And what they're going to be looking at is double the price of oil. And that's one of the big numbers. When they have to buy diesel for their machines and stuff. One of the big numbers that adds to the price of production costs for this silver. And also these mines, if you see any of them advertising a cheap production cost for their silver, some guy says, oh, I know a mine that can only pay $5 an ounce to get their silver out. That's not their all-in price for their silver. That price is just to get the ore out, and probably not even process it. They're giving you that number. Why they use those numbers sometimes is they want to impress the bank so that they can get more money from the bank. So they'll say, okay, it only costs us $5 to mine this silver out to the bank, and they want the numbers to look good for the bank, so the bank will extend them loans and stuff to keep their mine going. This is why they do stuff like that. And they're not given the real numbers of what it really costs them once they figure in exploration and everything else, and the total cost of an ounce of silver. See, they might give you a cost of $5 an ounce, but that's not their total all-in cost. And they figure their total all-in cost, it might be like $12 an ounce, the same mine. But they're not giving the bank those numbers, because they told that to the bank would say, well, you guys we're not going to extend you that loan anymore. Now, when they tell the bank $5, and the bank says, oh, we see a profit margin here, good profit margin, we'll extend you the loan. And this is why they do that, see? And then you guys, you pick up on the $5 number, and you say, oh, it only costs $5 an ounce for silver. Yeah, right. And so when the silver price starts to go down, like it's going down, it hits a certain cost level, and they're not going to be making any money, these miners. And they're going to have to close sections of their mine. They're only going to, what they really a lot of times do is they got sections in their mine where they got the highest quality ore. So it brings out more ounces per ton. They'll mine that in hard times. And then they'll close down a section of the mine where they're not getting out as much per ton. They'll sell the equipment and they'll send all the people home from that area. They'll say, okay, go home. And that's what I'm saying. It costs a lot to get those sections open again, buy new equipment and everything else. So you got to understand that also, when the silver price drops extremely low, so that it affects the miners, actually starts to affect the miners, then that trickle-down effect to when the silver actually starts to decline, you don't see that for a whole year. Or maybe more, before you actually see it on charts showing the decline in silver production. It's like a whole year later, or a year and a half later, and then you see it on the charts. The sharp decline in silver production. That's when everybody goes out and says, hey, you know what, we better buy some silver. Look at the drop in mining production. And I have a sneaking suspicion that that's what's coming very soon. And the charts will be coming out, showing it. A huge drop in mining production. And then they're going to have a huge deficit, and everybody is going to run in and want some. And then if there is a real shortage, because demand goes way the heck up, and supply is not keeping up with demand, you get an actual shortage at the store where you buy you go to Kitco or you go to any of these places that sell silver, and they start to run out, and everybody's going to want it. Everybody and their dog's going to want it at that point. Because then the price is going to be going up. Try to get some then. When there's a mad rush. This stuff is not like Bitcoin. You'll probably always be able to get Bitcoin or always be able to get Litecoins or whatever, or these coins. And the reason why is because they can always sell you a few Satachis or whatever. They're not going to run out. But there's only a limited supply of gold and silver, especially silver. Silver is actually much rarer than gold, and there's only a limited supply of it on the earth. The real stuff, the real physical stuff. And when they start to run out and there's not enough available to sell, then the price is going to shoot way up, and it ain't going to stop until it reaches a sufficient height where the people who have it are willing to sell back into the marketplace. It's going to have to reach a sufficient height and price to end the shortage when the people who have the stuff are willing to end the shortage, to sell back in and end the shortage. And when they're seeing the price go up daily, who in their right mind is going to sell? Until they get greedy. Until it gets high enough to make them greedy. Then they'll sell back in. And then they'll end the shortage. Because there's never going to be a real shortage where there's no silver. I mean, there's so much silver that people are hoarding that you just don't see it. All over the earth, the Chinese have hoarded tons and tons and tons. In India, they've hoarded tons and tons and tons. In America, they've hoarded tons and tons and tons. People have got it everywhere. It's just almost every house you go down the street, they've got silverware, and they've got old jewelry and whatever, And it's like there's a lot of it out there. There's not going to be an actual shortage that way where there is no silver, but you're going to have a shortage when you go to Kitco to buy some. This is going to be none available when the shortage is on, because nobody's selling back into the market, and those guys can't acquire any from their suppliers. And all of the mines will be allocating all of their supply to industry at that point. So you're going to have all the supply going to industry that the miners can produce. But like Apple will want all they can get for their phones. And they'll be demanding it all. And you're just not going to get any at your local Kitco dealer because Apple will go and get it ahead of you. And so what you're going to be is going to be a crunch. And that crunch will not end until the price gets high enough where these guys are willing to sell in and end it. And these guys are greedy. Let me tell you. But at a certain point, greed will win out. Greed will win the day. Then the price will start to drop, and that's when they'll all rush in and try to sell at that price. But the price is going to be extremely high when it drops. So she's going to fall off. And then she's going to do a dead cat bounce. That dead cat bounce is the place where you want to sell, because after she goes over that dead cat bounce, she's going to go down the cliff. But don't ever expect it to go down to the price it is now. You're never going to see these prices ever again. Because if it comes back down, it's probably going to come back down seriously. It'd be lucky if it comes back down to 50. After it comes back down off of the dead cat bounce. And that would be a crash down to 50. Because that's how high it's going to be when it's up there in nosebleed territory. And the only guys that are going to probably be able to hit the peak, the very peak, because they're probably going to create the peak, is probably JP Morgan. He's going to sell right at the peak. And then it's going to come down precariously, and then it'll do a dead cat bounce. And that's the place, the dead cat bounce is the place where you guys can hit that bounce, because the bounce will take a little while. Hit the bounce and you'll still get an excellent price and on the bounce, and then she'll fall, and then she's going to really come down the cliff. And I'm just thinking in my head, it's probably going to be up like something like ridiculous, probably like $400 or something at the peak, and then it'll come down like $100 or something, and then you'll have your bounce be probably $100 less than JP Morgan gets, you know. So it'll still be $300. And then she's probably going to come all the way back down to like 50. But it's never going to see these prices we're seeing now again. And then when it hits 50, you know what it's going to do? It's going to start slowly going back up again. Climbing the mountain again. Because this is the way markets always work. You know? This is the way the Bitcoin market worked. I knew that this big climb was coming. That she was gonna break her old peaks, Bitcoin, eventually. And these peaks here, a few years down the road, is gonna break these ones that we're making now. And she's gonna go up. She's gonna be just climbing the mountain. Bitcoin is gonna be probably in the end, it's gonna be really big. But the thing is I'm kind of frightened that they're going to that this is a beta test and they're planning something to get rid of it at a certain point. I'm a little bit frightened of that. So I'm not really going all into Bitcoin, but I'd like to have some. A little bit, you know. So that I'm not out of the loop. You know, maybe like a half a coin or something. So I'm not out of the loop. But you know, Bitcoin might go so high in the end that a half a coin might be all you can ever spend the rest of your life. Because after all, that is what 50 million Satachis. And just think, if you had $50 million right now, you wouldn't be able to spend it the rest of your life, you know. So anyway, I've probably talked enough. Thank you for listening. And like and subscribe, and we'll catch you in the next article. Bye.